This segment sponsored by Foster Financial. Welcome to Money Monday with Foster Financial, and today we are talking all things retirement, and joining me is their Vice President, Caleb Doane. Hello, Caleb.
Hi.
How are you?
I'm doing well. How are you doing?
Doing well. Okay, so we've been talking about misconceptions in finance, and last Money Monday, my mind was blown because you informed us of the whole tax bracket misunderstanding.
Yeah.
And so today we're going to talk about retirement, but this time how much someone should save.
Yeah.
So kind of break down why this is a misconception.
Yeah, I think the misconception kind of surrounds, maybe people assuming that there's a certain number that everyone needs to hit in order to be able to retire.
Yeah.
So there's a lot of folks that come in maybe in their first meeting and they say, hey, I've always heard that you need, $1 million to retire or 750 grand or whatever that kind of rule of thumb might be that they heard. In reality, that number is completely different for everyone. And it depends on so many different factors that there is not a good rule of thumb to actually say how much somebody should have. It's completely customized.
Okay, so when people are thinking about that and kind of building out their financial plan, what are some of the key differences in financial plans as they are trying to assess that number?
Yeah, so I mean that number is going to be impacted by so many different things, which are things that we look into when we do a financial plan for somebody. But the amount of money that somebody needs at retirement is going to be impacted by, one, the amount of expenses that they have every single year in retirement, whether they still have their mortgage or whether that mortgage is going to drop off soon, how old they are when they retire, whether they have a pension or not, how much they're getting from Social Security, how long they're going to live in retirement, which of course nobody knows, but we can still make an estimate on that. Maybe even whether they're going to move in retirement or have a big one-time expense. Maybe they're buying a summer home or something like that. Or even if they want to leave an inheritance to kids. So you can see that there are so many different factors that are going to determine how much somebody needs. And a lot of times when people are saving for retirement, whether they know it or not, they kind of have some number that they're thinking of that maybe they heard at one point, 750 grand, I need 500,000, whatever it is. And a lot of times that's influencing how much they save. The misconception part is oftentimes that number is very different. The actual number that they need to save is different than maybe what they're thinking.
Okay, for that individual. So it's like someone does need to have a number in hand, a goal to shoot and to aim for. That's for that individual, but that doesn't apply to everyone.
Exactly, yeah.
Okay, and so as people are just trying to figure out that number, what can they be doing, I guess, as they are living life? Like, is this something that you got to think about younger and say, okay, let me figure out my number now, or is it something that you really won't know until you're closer to retirement age?
Yeah, I think no matter how old you are, we can do a financial plan for you and help identify what that number is going to be. But it's also very possible that that number changes over time. So maybe your standard of living changes a little bit. Maybe the older that you get, your income goes up a little bit, and so maybe that standard of living increases too. But we factor a lot of that in when we do financial plans, especially for folks who might be 40 years old. Maybe they're 20, 25 years away from retirement. We factor in some of those changes to try to make sure the plan is most up to date. But then also we're checking in with these clients, usually several times a year. And so we're making these adjustments very frequently and seeing, all right, do we need to, increase retirement savings a little bit more, decrease it a little bit? Can we have you retire a couple years earlier than what we originally anticipated? So as you get closer to retirement, that number gets a little bit more solid, but still it's a really good idea to have a good idea of what that number is, as early as possible.
Yeah. And do you have people coming in with a preconceived number, and then as you do the financial plan, they're shocked, like maybe they need a lot more or maybe less?
Yeah, I would say normally people assume that they need more than what they have actually. So there's a lot of people that might come in and they have, $300,000 saved for retirement, and they're like, man, I've always heard, you need $750,000. I feel like I'm not really doing a good job. But then we look into it and, maybe they have a pension, maybe they have Social Security, maybe their cost of living is just relatively low. Whatever it might be, a lot of times they might be in a better situation than what they anticipated. So that can always be really good news for folks. Yeah.
So don't be scared to go in and to get this report and to really work with you guys.
Yeah, absolutely.
All right. Well, thank you, Caleb.
Yeah, thank you.
And if you would like more information about Foster Financial, we'll have their website and phone number listed below. You can contact them for a complimentary consultation, and I'll see you after the break. This segment sponsored by Foster Financial.